That's a couple of stocks on my radar that you should be keeping your eye on today, but now we're going to bring in our first guest, and that's going to be Scott Bauer. He is the CEO of Prosper Trading Academy. He's joining us to take a look at a couple market movers today. Welcome to the show, Scott.
This is Tom.
Hey, it's been quite an afternoon. Typically, we see a little bit of consolidation, maybe a slowdown midday, but we saw those bond yields spike on that flash crash after the 7-year auction today. Just give me your take real quick on your outlook for the equity markets, which is bouncing off its lows, but those rising interest rate yields are putting some downward pressure on stocks.
I gotta tell you, it was like deja vu from almost 3 years ago to the date, February of 2018. We saw those yields tip over 3% at the time. It was like 305 at the time. And it was like all of a sudden, major flash crash. Dow was down 1,100, 1,500 on the day. We saw S&Ps absolutely just get annihilated. And this just brought me back and reminded me a lot of that scenario. What do you make of that? Well, yes, interest rates rising here. Nobody really wants to see that. Though when you digest it, when you think about it, that's really a good thing. Things are leveling off a little bit. I'm not saying that the economy necessarily is on the move, getting back to where we need to be. But man, we were in this low interest rate environment, Tom, for way too long. And certainly, companies, especially big tech, they were able to take advantage of that. So that's what's putting the spook in the market right now. I don't see this as a major detriment in the long run. It's obviously a shock to the system right now.
Yeah, especially with valuations of the S&P 500 stocks at historically high levels. That could also have brought on that big slide that we saw in stocks. But I wanted to talk some individual names now. Best Buy down about 9.5% today after earnings. Revenues missed on Best Buy, and this has been an outperformer recently due to the fact that their Geek Squad provides a lot of additional revenue, even though their store volumes are down a little bit. Give me your take here on Best Buy.
Yeah, this one I'm really confused about moving forward, because if I was just looking at a technical basis right here, I would love this stock. I would want to buy this stock because this thing traded right down to the 200-day moving average, major support there. However, some of the things that they said in their report, the metrics are not so great. Work from home slowed, right? So what is net? Well, they actually lowered their full year forecast. They dropped it on the bar a little bit here. So again, ordinarily I'd be extremely bullish here from a technical standpoint, but I'm a little skittish. I really need to see some consolidation here around that 200-day moving average before I would want to jump into the upside.
Yeah, this is a perfect example of a stock that has a great quarter, Scott, overall, but you guide lower at these type of valuations and the way that the stock's been moving lately. You'll take some pain on that one, but let's move over let's move over to the next one. Amazon, down over 1% today. It's off about 4%, I think, for the week. And this one's getting caught up in that sell-off of the major FANG names here. Give me your take here on Amazon.
Yeah, not just, the overall sell-off here, but, more news about legislators, and congressional hearings against big tech. And, I don't want to say that we can write that off, but yeah, I think we've seen this picture before, and we've seen panic come into some of these names before. And I look at Amazon, and similar to Best Buy coming down to some major support, Amazon is as well. It's coming right down to 3060, 3070 area. This one I absolutely would get into, and it almost dipped down there on the flash, down today. I'm not saying that we're looking for a major spike back up here, but I think that there is enough support here where, especially with this increased volatility, I want to sell some premium. I don't mind selling some put spread. And in fact, open, 100% transparency ourselves, Prosper, our students today, we actually sold a very, very expensive bullish iron condor today when Amazon was trading down around 30.80 or so. So again, I'm not necessarily looking for a big spike back up, but I think there is enough support here to warrant not worrying so much on the downside.
Yeah, I like that setup, Scott, where you get a stock that's gone from basically about 3,400 down below 3,100 in a matter of weeks on really no news, nothing negative on this company. So picking up short puts on a down move like that, not a bad idea if you're neutral to bullish on that. And the final thing I want to talk about, Scott, is the overall tech sector. You sent over a note that you'd like to talk about the Qs, and this ETF's down over 6% from recent all-time highs, is off 4.5–5% so far this week, and it just seems like anytime these rates go up, this tech sector, this growth space that's been leading the markets for the last few years just takes it on the chin first and foremost.
Yeah. No doubt about it. It's so hypersensitive to the interest rate environment right now. And the Qs are just a fantastic way to look at that entire NASDAQ space. And I believe that this sell-off is overblown. I'm not saying that we can't drift down lower from here. And I'm not saying that the rise in interest rates is not of concern. But I think with the volatility we've seen here, this sell-off is overblown. If you look at the vol of the NASDAQ, actually, the vol Q futures, which trade at the CME, that thing tipped off today at a high of about 35. It was up about 30% at one point today. Now, the triple Qs, they did break some support around 319 today, no doubt about it, which is the 50-day moving average. But this is another scenario to me, Tom, that I want to take advantage of this really expensive volatility. And I'm not necessarily looking for the Qs and the whole NASDAQ space to make a major rally back, but I think there's enough support there where I'm selling some downside puts.
Yeah.
Or put spreads, I should say, because I always want to be risk defined.
Yeah, that's a great point. And I think, Scott, when you look at, the pullback and the volatility expanding, I think the VIX is about 27 now, is higher when we were at our lows of the session.
Yep.
I think traders, instead of panic, like you and I, from our trading floor days, we look at these pullbacks over the last week, maybe in the QQQs, as opportunities if you still have, an assumption based on where you think it's going to go over a specific amount of time using the option market in general, like we always do. Does it scare you a little bit with the 10-year yield getting back to 1.5%? And it's now higher than the yield on the S&P 500.
Right.
Does that cause you concerns, or do you look more at the overall market and what it has done over a specific period of time and what you think might happen in the next week to a month?
So, Tom, it's always real difficult for a trader to separate the trading side from the investing side, right? So when I look at the current environment from a trading standpoint, love it. We love the volatility, right? Volatility brings opportunity. When I look at a little bit longer term, you have to think about some concern, right? But I'm not doing this as an investment on a daily basis here. I'm trading. I'm looking to trade these trends. I'm looking to trade the volatility here. So I'm looking at that opportunity. But bottom line is I'm doing everything here, selling the high volatility when it's there and buying the low volatility when it's there. I'm doing everything with spread so that I am always completely risk defined if and when I'm wrong. And I'm wrong enough.
Yeah. I always say that, Scott. Everything I've traded in my career, I've lost money on. I've just thankfully done a little bit better on the winners.
Exactly.
But spoken like a true options trader. Thanks so much, Scott. Taking advantage of that higher implied volatility provides some opportunity. Scott, have a great day. That's Scott Bauer.
Tom, you too.
He's the CEO of Prosper Trading Academy. Coming up next,